Hi there, Sue Baer here, helping you become the CFO of your own company. You hear a lot about the subchapter S. Let's talk about that today. Everyone talks about all the tax savings you can have. You're going to save $10,000 in taxes. Well, in my opinion, the only reason you should be forming one is if you have the personality for it. The tax savings are great, but number one thing to consider is what is your personality? Can you handle these things? Are you willing to persevere through the process of forming it? Here's the thing. You say, oh, lawyer, do this for me, form this company for me. Now, here's the thing. They don't always do the subchapter S elections for the federal and for the state. And it's very important to follow that whole process through because this causes tons of notices. People come to me as an accountant, and they say, oh, here's my subchapter S, but it's not even formed right. And then the return bounces back to us, and maybe the state has been approved, but not the federal side. So it's very important that you follow that process through. Get someone to help you do that. Then, are you willing to do a proper payroll? One of the rules for the subchapter S and why you have the tax savings is you put yourself on payroll. Now, for the payroll, people just say, well, I'm just going to pay myself $10,000, or on the internet, I saw that I can make $100,000 and pay myself $50,000. That's not true. You have to actually base the payroll on something. So Department of Labor standards or some other like kind thing that does your payroll at a reasonable amount. What would be the salary? If you're the manager of your company and a manager in your field makes $80,000 and now you're putting your payroll at $25,000, that's a no-go. You have to have a reasonable salary. You've got to know these rules in order to form this. Are you willing to put away the savings that you save? So say you do save $10,000 doing this subchapter S. Are you willing to take that savings and put it into retirement? Because here's the thing. The tax savings aren't just some magic taxes out of the blue that you're saving. They're actually your Social Security taxes. So now your Social Security is going to be lower. I know you say, oh, it's not going to be there, I don't care. But once you get there, what if it's not there because you've been shorting it because you haven't been doing payroll properly on yourself? So you've got this tax savings. And so why don't you take that tax savings and put it into retirement? So before you think about the subchapter S, think about the tax savings that you're losing and make sure you're not just spending that on other stuff, that you're putting it back into your retirement. Are you willing to pay others? Now your accountant is going to cost you more because you have a whole separate form for them to file. And also there may be other year-end planning and other things that you want them to be doing for you to be helping you. So your accountant is now going to be more money. You're also going to want to pay a bookkeeper. Well, you're saying, well, I've been doing my bookkeeping myself and it's not that complicated. But here's the thing. When you have a subchapter S corporation, you have to do what's called a balance sheet. So most people are used to looking at like their profit and loss. That's your income and expenses. But with the balance sheet, you have to have that for the corporation. It's required to be on the subchapter S 1120S tax form. Now, so you're paying your bookkeeper for that. Also, now you're paying a payroll company. I would not advise doing payroll yourself. You're going to have to do the payroll because of the reasonable compensation for yourself. You want to pay a payroll company. Don't mess around with that on your own. Also, can you stomach getting notices in the mail? As soon as you're a corporation, it's like you're Bon Jovi and you're getting fan club mail. You're getting tons of notices, this like starting about payroll. Did you form the subchapter S? Maybe this isn't right. They come in the mail, and notices freak people out. And yeah, they're all handleable. You can get through them, but it does freak some people out. So you have to be prepared for that. Also, do you plan on being self-employed for a long time? If this is just a venture you're maybe going to do for a year or two, you're not really sure about it, form maybe an LLC first. Think about another entity like the LLC or just doing business as your own name as a self-employed person. Don't necessarily get into this whole hassle of forming a corporation because after you've formed it, and then say you don't do business after a year or two, you have to go through the whole process of dissolving it. It doesn't just dissolve on its own because you stop filing it. You're always required to file the return each year. After you've considered all that, then look at the income limits and get with an accountant that says, yeah, I think you should do this, but make sure all your personality checks are in order first. All right, take care.